Hello, my friends. Welcome back to Outspoken Market Global. Leandro Guerra speaking. In today's class, I want to teach you about the golden pattern in the gamma exposure analysis. That since I've been trading gamma exposure, I am in the market since 2007, more or less, and I've been trading the gamma exposure since October last year. So to me, it was something that I have incorporated in my trading activities, in addition to the quantitative models that I already use. I've spotted this pattern several times, mainly on the triple Q, on the SPX or the US 500 CFD, as well in the Bitcoin futures. And so far, the ones that I have spotted, it has never gave me a loss yet. I know it will one day, but so far, it's just perfect. And what is that? It's actually extremely simple. Let me pick up the example I got on the 10th of August, so a couple of days ago. This is not theoretical. I usually post some of my results on social media. I've posted this one in Instagram and I think here also on YouTube as well. And the pattern is the following. Every single day before the market opening, I publish on the om-qs.com/blog the Janos Market Intelligence newsletter. This is free. And in that newsletter, you can find the gamma, also a market commentary, but the gamma exposure levels for Bitcoin, SPX, and the triple Q. And when you go here and then you see that the spot price is above the put and the call walls, or it is below both walls as well, they will be strong magnets and the price will move towards the nearest one. It's as simple as that. Nothing else, right? Nothing else. There are many other ways to trade the gamma exposure. There are several classes here in the Outspoken Market channel already. You can check them out. But that pattern, it's rare, so it does not happen every day. Although I will show you three examples, the one we got in the 11th, on the 10th, and also in the on the 6th of January in the SPX again. That was amazing as well. And those guys, right, they work perfectly. Let me pick up this one from this Monday. You see, the spot was 7,758. The call wall, sorry, was 7,750, and the put wall was 7,730. So spot above both walls. Check. The CFD has a particular advantage because the market opens before the main hours, the main trading hours we have in New York. When I went in front of my computer, the price was here already. So I entered a short position. So I'm speaking about this area over here. You can see it was Monday, the 10th of August. The price was here. Even if I was working in the opening, it would be fine. And then I did the short. I was lucky to get right over here, close to the max of the day, essentially. But I could have spotted just a little bit before. Doesn't matter. The point is, it was above and way above the closing that we got from the spot. I shorted. Then the price went all the way down to the nearest wall, that in this case was the call wall at this level. As simple as that. We also had yesterday on the triple Q, let me bring it here. The spot was, this is the inverse. It's the other example. The spot was 720, almost 21, and the call and put walls were 722. Price below both walls. Check. In this case, the walls they were the same. Check it out. Triple Q, it's here. The 11th, here was the opening. It was already there. Essentially, the max of the day at that point in time was the wall. So it has opened here, went to the max, it did a pullback. So you could also have taken advantage because it closed the gap in the pullback, and then it gave you an additional margin to get it back towards the 722 that was around here. Fantastic. It's fantastic. We also had another example on the 6th of August on the SPX again, 7,724 for the spot, above both walls that they were together, 7,700. If I go back to the 6 that was here, oh, sorry, this is the triple Q, apologies. Let me go back to the 6, and my memory it's already betraying me because it's late in my day. Okay, 7,700. It was here. It was a little bit a shoppier day, but you see where was, because you have my face over here, but check it out. What was the minimum value of the day? Essentially, this level, 7,700. So you had the full day as essentially as an opportunity to open the short position that brought you down here as well. It's amazing. Of course, it will fail. One day it will fail. On all the days that I've spotted them, as I told you, they were just perfect. Be prepared because you know Murphy's Law. Likely after this class, maybe the very first one we will have in the future is going to be the one that is going to fail just to smash me down. It is what it is. Murphy's Law, it's actually the strongest law that we have in the market, but the pattern is here, is this one. Does it work to any other assets? Likely, I haven't tested because I cannot trade, and I suggest you also to do not trade several assets as well. I just focus on the main ones because if it works here, if I have opportunity here, I do what I have to do, go home and have a life. So if you have any questions, leave in the comments. Join our Discord community as well. I'm more than happy to take any questions you may have, your doubts, and subscribe in the case you are new to the channel. Take care, trade safe, and keep things simple. Ciao, ciao.